Hello everyone, and welcome to the Real Kingman Corporation, where we help business owners make more money and create more wealth. My name is Philip Wallace. In this episode, I will be describing in 5 steps the best ways that I know to keep your money moving. So listen closely, because this is the type of information that could change everything for you. Step 1, banking. The primary purpose of banks is lending money. Therefore, banks are not the best place to save or grow your money. What you want from a bank is credit cards, lines of credit, and the ability to take out a loan. And you can get all of that from one bank. So would it make sense to have a similar relationship with a second bank? How about a third, fourth, or fifth bank? If you had more relationships with more banks, wouldn't you be able to borrow more money? What if one of the banks gave you a $10,000 credit card? Would you have more cash available? What if a second bank gave you a $10,000 credit card? How about a third bank and a fourth bank? What if 5 banks each gave you a $10,000 credit card? Would you have more cash available to do what you want? Of course you would. You just have to spend the cash on the right things, because credit cards are basically like cash. So if you have more bank accounts and more credit cards, you will always have more cash, as long as you can put the money that you spend back on the credit cards. Therefore, the real problem would be, where do you get the money to put back on your credit cards after you've spent it? Well, how about if you got the money to put back on your credit cards from a line of credit? And the first thing that I'm going to say about a line of credit is that most people are not using it properly. Because a line of credit is for buying assets, paying down debts, and for emergencies. Here's an example of how to properly use a line of credit. Say you have a $10,000 line of credit, and you bought a vehicle for $50,000 with $0 down. Well, before the first vehicle payment is due, you can take $8,000 from your line of credit and put the entire $8,000 down on the principal amount due on the vehicle loan. This would immediately drop the total amount due on the vehicle loan from $50,000 to $42,000, which would be huge. Do you have any idea how long it would take if you were just making regular monthly payments to bring a loan down from $50,000 to $42,000? Think about it. It would probably take a year or more. But by using your line of credit, in less than a month, you could cut a $50,000 debt down to $42,000. Of course, this would be an enormous first move towards paying off the remaining $42,000 debt that's owed on the vehicle. It's understandable that you might not be comfortable taking $8,000 out of a $10,000 line of credit, unless you had a clear and simple plan for how to return the $8,000 back into the line of credit. One thing is for sure, you would not want to put any money into your savings account. And you would also want to avoid putting anything into your checking account. So if you earned $5,000 for the month, you would need to put that money somewhere. How about if you put the entire $5,000 straight into your line of credit? So that available cash in the line of credit would go from a low of $2,000 back up to $7,000. Yes, we understand that you still have to pay your bills, because the monthly payment on your vehicle has to be paid, along with your mortgage, groceries, and everything else that you would normally be spending money on throughout the month. You could either pay for them with your credit card and then use your line of credit to pay down your credit card, or just pay for them directly from your line of credit. Let's say by the end of the month, the total amount that you spent on your expenses was $3,000 of the $5,000 that you made, which would leave you with $2,000. Now what you would do is leave that $2,000 that you have remaining for the month in your line of credit to lift the total available cash in your line of credit to $4,000. Now let's say you did the same thing again for a second month, bringing your line of credit to $6,000. Then did it again for a third month, bringing your line of credit to $8,000. If you did it again the fourth month, your line of credit would be filled back up to $10,000 in available cash. You should be smiling because you could now drop another $8,000 bomb on your remaining $42,000 debt. bringing it down to $34,000. And you could do that in just 4 months. Do you see how powerful this is? You're still able to go all the same places and do everything that you would normally do because nothing has really changed in your life. And if it's working, why stop when you can continue to leverage your line of credit for another 4 months? Then you can drop another $8,000 and bring down the amount owing on your vehicle to $26,000 after just 8 months. If you continue this way, after 1 year, you would only owe $18,000. And remember, it was a $50,000 debt that you began with just a year earlier. But by using your line of credit, you could pay off the vehicle in about a year and a half, because you would still be making all of your regular monthly payments while being able to drop $8,000 bombs every 4 months using your line of credit. It's also important to understand that the debt doesn't have to be for a vehicle purchase. You can use your line of credit to pay down any debt, like a mortgage, or pay off the amount owing on any asset that you purchase, whether the debt is $50,000, $100,000, or $1 million or more. The line of credit is King Kong of credit. And if you needed more money at any time, you would still have the ability to take out a loan from one of the banks. So let it sink in how powerful step 1 can be if you implement it in what you're currently doing. Or we can work together to implement this in a new plan for you and your business. And we have the best plan, because not only will our plan cost you little to no money out of your pocket, but to pay off a huge debt, you won't have to change your spending habits. And that should amaze you, because all we are doing is leveraging your ability to borrow money from the banks. Step 2, buying businesses. Now, before we move on, do you now know where to get money if you needed it? Do you now know how to pay off any large debt faster and easier than you ever thought possible? Let's move on to our powerful plan for what to do with all the money that you now know is available for you. And here at the Real Kingman Corporation, we believe that without a doubt, your very next step should be to focus on buying businesses. This is our specialty. That's why we have put together over 200 ways to buy a business for little to no money out of your pocket. Our banking skills can be used to pay down debts. Our acquisition skills can be used to get leads and sales to grow a business. We have made it simple for business owners, such as yourself, to double your income in 6 to 12 months. So if you're stuck at a certain income level, I am here to save you and your business. So now is not the time to act like a know-it-all. Click the link to book the call so you will be able to use the income that you generate from your businesses to pour into something that's very important. Step 3, life insurance. No matter what else is going on business-wise, there's nothing more important than making sure your loved ones are taken care of. While at the same time, it would be great to have more cash available so you can continue to grow your wealth. And that's why we believe that at this point in the plan to keep your money moving, you'll need to have more life insurance. Our favorite type of life insurance policy is called cash value life insurance. Although you should have many different types of life insurance policies. A cash value life insurance not only offers a death benefit, but it also offers the ability to borrow money from the life insurance company. In most cases, you can borrow up to 80% of the amount of money that you have deposited into your policy. And you can borrow that money tax-free. This kind of loan comes with little risk, because if you can't pay back the money you borrowed from the life insurance company, they wouldn't hound you or report you to the credit bureaus. Yes, we strongly encourage you to avoid defaulting on the loan, but if you did because of some unusual situation, the insurance company would just take back what you owe from the death benefit that is promised to your beneficiaries. So now, say you put $100,000 into the cash value life insurance policy and didn't put a cent more. That $100,000 would continue to grow over the years to $105,000 and continue to gain dividends, $110,000, because the money you borrowed from the life insurance company was a loan directly from the life insurance company, not from what you deposited into your policy. So as time goes on, you will still be able to borrow even larger sums of money from the life insurance company. And the question then becomes, what are you going to do with the money that you borrow? Well, how about if you use the money you borrowed from the life insurance company to buy and fund Step 4. Real estate. We prefer buying and holding income-producing properties, such as a trailer park and/or an apartment building with 8 units or more, and having it all overseen by a property management company. This frees you up to use our banking knowledge and our relationships to grow your income from your real estate holdings. This way you can keep your money moving by investing in Step 5, the stock market. This is where you should be storing and saving your money, not in the bank. Inflation will eat away at your money when you leave it in a bank savings account, while the interest you gain on your dollars will be measured in cents, not dollars. And the biggest advantage that the stock market has over the bank is how high the ceiling is for your money to grow. For example, $10,000 can easily turn into $100,000 or more when it's invested on the stock market. That won't happen in the bank. And $10,000 will be difficult to drop below $10,000 when it's on the stock market. While the stocks you buy, or how much of each you buy, and whether you sell them or not, should remain completely up to you. Why would you let someone pick them for you? I mean, where's the fun in that? Although we're encouraging you to play it safe and think long term by putting at least 60% of your total income into dividend paying stocks and around 30% into more aggressive stocks, and to leave the last 10% right on the platform in case you want to invest into something else that comes up. Another great thing about having your money invested on the stock market is the ability to borrow against up to 70% of the total amount that you have in stocks. If you follow our steps for keeping your money moving, the money you borrow against your stocks can be used to buy whatever you want, and buy it basically for free. We are the Real Kingman Corporation. As you can see, we use leverage to keep your money moving at the lowest cost and with the least amount of risk. So there should be no wondering if this is right for you. If you own a business and would like to put much more money into your pocket than you are currently, then push the link to book the call.